Welcome to Market Buzz on ForexTV.com. It's Friday, February 6th. I'm Tim Kelly. Markets surged despite a dismal jobs report, and the dollar is selling off. Now for a look at the headlines from the CEP news desk. Stock market shrugged off poor jobs figures. Canadian dollar falls after the worst economic report on record. Gold also falls after the jobs report. Job loss mounted in the U.S. and the unemployment rate climbed to a 16-year high, but stock markets rallied in the face of the worse than expected figures. The U.S. economy shed 598,000 jobs in January, the third month in a row that job losses have been more than 500,000. The unemployment rate rose 0.4 to 7.6%, the highest rate since January 1993. The consensus forecast was for 540,000 job losses. U.S. President Barack Obama unveiled an economic advisory board led by former President Paul Volcker, and markets seemed to like what they heard as gains accelerated. In the Forex market, it appears that risk trades are back in play. To give us more insight, we're joined today by Matthew Straus, RBC Capital Markets. Matthew, welcome to the program. Thanks again for joining us today.
Oh, thank you for having me.
So, Matthew, we're seeing a bit of a run here in the risk trade, and it's a little bit surprising understanding that we had such a devastating loss once again in the jobs market. What do you make of it here?
Yeah, I think if it was a normal environment, we would have definitely seen a retreat in the market. But I think with the political bickering regarding the second stimulus package, these worse than expected numbers is giving another motivation and another reason for Congress to try and push the second stimulus package through even as soon as this weekend. And we might see a handball by the middle of next week. And on the back of that, the market were actually took heart from this weaker numbers and started rallying. So the numbers was the trigger, but the reason for the rally has more to do with the prospects of the stimulus package being passed in the very near future.
Well, we won't know that till tonight in all likelihood. So that would not affect today's act. Well, it is obviously affecting today's activity, something up because we've seen, just looking down at the data center here, I see, for example, on the risk trade, Aussie is now pushing, from a technical perspective, up over its 50% retracement on the Fibonacci from its recent fall in early January. So we're seeing that Aussie at 67.71, pushing 68. We're seeing a euro now over 129 and yen now over 92. So if it's not passed this evening, what do you think will happen on Sunday night?
Well, I would be surprised if we do not see a knee-jerk reaction, because clearly the move towards the riskier currencies, Aussie, Kiwi, even the Swiss krona and Norwegian krona, came about in anticipation of this stimulus package passing. And if it doesn't happen either tonight or during the weekend, because I think that the only chance that we have for not to see a reversal on Monday is that there's a very strong statement and commitment over the weekend to pass it early next week. But if the market is disappointed and it looks as if the whole situation is going to drag on, we probably would see a very strong reversal in the Aussie and Kiwi especially, that has gained during the last 24 hours more than 3%.
Matthew, gold sold off a little bit today. What are we thinking about a longer-term strategy there when we see gold selling off?
I think the gold tends to continue to trade as a safe haven asset. One would have expected in a normal environment with the dollar slightly under pressure that gold would move up. But the sell-off that we're currently seeing also is directly linked to risk aversion. And in this case risk appetite, so rather the risk theme. So with risk appetite increasing, less need to hold safe haven assets, i.e. less need to hold gold.
Okay, and along the lines of commodities, oil now under $40 a barrel. How does that shape up for Canadian dollar?
Well, the Canadian dollar had its own shock this morning with a very, very shocking decline of 129,000 jobs, which is basically the highest on record for Canada. So that set a very, very bearish tone for the Canadian dollar, and then, as you've rightly mentioned, oil now again testing $40 a barrel. If you look at the non-conventional oil production in Canada, once we start getting below 40, I think significant questions can be asked about the viability of the so-called oil sand projects. So yeah, the tone is very bearish for the Canadian dollar, although we've seen late afternoon the Canadian dollar regaining most of its earlier overnight losses, partly because of a weaker US dollar.
Okay, Matthew, thank you very much. I think we'll leave it there for now. This has been your New York Forex Market Buzz with Matthew Straus of RBC Capital Markets. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on forextv.com.